Trading Nut, episode 174.
I don't mind getting a 1 to 3 risk reward because it's not like I'm risking $1,000. My trades, I'm risking like 15, 20 grand.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got a trader that doesn't go by name. We've got Trader X on the show. We're calling him Trader X. Hopefully we'll have a Trader Y and a Trader Z at some point in the future as well. Now, Trader X is on the show. Wants to keep himself anonymous, which is probably by rights. I mean, the guy turned 5K into 15 million over the course of his trading career, and we are so lucky to get him on the show to share that journey, what he did, how he did it, his style, his approach, everything that sort of went into him being able to do this phenomenal feat. We get the detail. All right, so guys, that is coming up. Unfortunately, you don't get to see who he is. You don't get to find out who he is, but you get to learn the lessons that he has, which is fantastic. Now, before we get into the show, guys, I do want to thank you all for this thing appearing in the post just the other day. It is the Trading Nut, and if you can't see it, if you're on the podcast, it's the Trading Nut YouTube plaque that they send you when you've hit 100,000 subscribers. So thank you for subscribing, thank you for listening, thank you for keeping this thing going. Really appreciate all of you guys out there for tuning in every week. This thing goes live, and it's only the start of the journey. We've got more things hitting the airwaves all the time, so stay tuned, stay subscribed, and you'll see what's coming next. Now, talking about what's coming next and what's new here, so the Trading Nut Funded Cup is still going. You can check that out over at my sponsor, City Traders Imperium, their website. They've got the leaderboard up there. Top guy is currently hitting 62% return in what is probably just over a month now. You can join the June competition. You're going to find out about that in a second as well. So June competition coming up soon. Other things from the City Traders Imperium crew. In fact, we had two of them on the live stream this past week. Rodrigo and his cousin Diego have come on the live stream. So I said last week, okay, these guys on average get a 1 to 5 trade, and they got a 1 to 10 hour trade in the live stream. So folks, if you're not catching these, they're well worth going and checking out just for the educational content that you're going to get regardless of any trades that are actually taken. Then we had Andy Peters on for the first time as well, and Andy Peters trading a real live account. You can see his MetaTrader, you can see him placing the trades, and you would have seen him take 10k profit on the live stream in under an hour. So phenomenal stuff, folks. If you're not checking these out, do hit subscribe so you can catch them in the future. And last couple of things before we get into the show, we've got the Genius Trader Club. So if you're trying to get your trading mindset or your mindset as a whole on point, then go and check out the Genius Trader Club. Links below the video in the description. The price is going to jump on that soon, so you've got a really good window of opportunity here to jump on board and let my trading mindset mentor, Andy Murphy, help you guys out as well. And the Robot Builders Club is still open. If you are looking to automate some or all of your trading, then that's something that I can help you do through my Robot Builders Club. Check out the free robot link below the video and have a play with that. Have a look at what's in the Robot Builders Club, and I'd love to see you on the inside. All right, folks, let's get on with the show with Trader X. Folks, if you missed out on joining the Trading Nut Funded Cup, don't worry. With over 3,000 traders registered, my sponsors, City Traders Imperium, have decided to run another. But this time, they've promised the prizes will be even bigger and better. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description, then sign up for free before 15th of June 2022 and get 10% off any City Traders Imperium product just for entering the competition. Good luck, folks, and we'll see you in the cup. All right, folks, here we are on Trading Nut. As you can see, it is just me on the screen, and unfortunately, you're going to see me if you're watching the video the whole time. We've got Trader X on the other end, and Trader X has been recommended by a past guest, and because it's Trader X, I'm not going to share who the guest is, but they met him at a brokerage event, and told me what this guy's story was, and I was like, I've got to get him on the show. So you're about to hear it. I'm not going to spoil it. Hopefully I don't. The title's probably going to spoil it anyway, but he's done some amazing things over the course of the last 15 years, growing a small 5K account to well into the 8 figures mark. So welcome to the show, Trader X.
Yeah, thanks for having me. It's I think it's my first show I've ever done, so I'm a little bit nervous.
Well, that's all good. Well, look, thank you ever so much for coming on, because I definitely want to hear your story. At the age of 16, I mean, how did things get started for you? Why on earth did you even get involved and interested in the markets?
Yeah, so I started learning when I was about 16. I got sort of interested into it, but obviously I couldn't open my first account until I was 18. Due to the laws here in Australia, and I'm not sure about where else. But yeah, I actually got interested in it. I was just sort of doing my research and stuff, and then I'm like, you know what, this is actually a cool thing. And back then, this was I don't even know, 2006, something like that, 5 maybe. I don't even know how old when I was 16, what year. But there wasn't much online about it at all, especially here in Australia. You had to really go out of your way to find any sort of anything about it on the internet. So yeah, I just sort of came across it one day, and I was like, it was really, really interesting. I want to check it out. And then I sort of decided to, try and get into the professional industry of it. So I applied for a few places here and there, like internships and whatnot. And then I had I don't think I mentioned this to you, but I was working at Deutsche Bank for a few years as a trader. Oh, didn't start off as a trader. Started off as just like I can't say the word, but just kicker
right
around and getting the coffee and that sort of stuff. But then I sort of worked my way into trading floor and then market research, and I did that for a few years before deciding just to go on my own.
And so okay, cool. Well, I mean, that's a very quick view of how you did it. Now, let's go back to when you were 16 to 18, learning the markets. I mean, you wanted to start trading. What on earth did you do at that point to get some sort of knowledge?
Well, like I said, there wasn't much at all online, and I believe back then, pretty sure it was Forex Factory. There was a website. I'm pretty sure it was Forex Factory. I can't exactly remember, but I used to go on there a lot, and I used to sort of chat to people here and there, and just you get little snippets of videos and that sort of stuff, and then really sort of I'd sit down, I'd draw charts out and be like, okay, so if we sort of see this and then this happens and but then like I said, but back then there wasn't a whole lot of education. So a lot of it came down to really understanding the fundamentals of why markets move. That was a lot easier to research than it was to find sort of technical analysis. Right now, you've typed technical analysis, it's everywhere on the internet. And everybody forgets the fundamentals, where I'm sort of the opposite way around, where my trading is 90% based fundamentals, and I just look at the charts just so there's an entry. I don't really use patterns, and I really don't use much technicals at all.
Okay, so back then, I mean, were you, I suppose, in terms of educating yourself, how did you determine what was worthwhile learning and what wasn't worthwhile learning?
Well, I didn't really know about technical analysis, right? So, because when I was looking it up, it was all just economic-based reports. You'd see reports on all these different websites, why the Australian dollar is getting weaker, why the US dollar is getting stronger, why gold's moving, all sorts of stuff. So you have to learn, okay, cool. When this happens, this is going to happen to the currency. When this happens in the news, this is going to happen to currencies. That sort of stuff. And you sort of just pick it up over time, and it sort of just gets indented into you, it becomes second nature. And then that really helped me when I actually applied at Deutsche, because I was like, I understand quite a lot of it, the fundamentals, and they were sort of we don't care about that. We're going to teach you anyway, our own way. So cool, which was all basically fundamentals anyway. But it did give me a sort of a bit of boost. But yeah, it was kind of just more self-research on reading the economy, really, the macroeconomics of why things move, what happens when this happens.
Okay, and so in terms of actually placing trades on the market with this information, how did you go about that?
Yeah, so I was 16 at the time, and really annoyed me. I was like, "Mum, open my account." She kept saying no, until sort of eventually I got my own account. And then sort of, I didn't really know much about risk management, anything like that. But that's when I actually started to go into Deutsch. And then I kind of got my own trading in terms of my own trading account. And I was sort of working at Deutsch for a bit. And then my first year, that's when I got Deutsch. I'm like, oh, cool, this is really cool. Like, let's start my own account. And then I started my own account, like just chucked in like $5,000 and eventually just built it up from there.
And so, like, placing a trade using the fundamental analysis, I mean, what, this major news doesn't come around all the time. So what did you have to do from a patience point of view and getting in?
Yeah, I'm definitely not a day trader. I'm much more position trader. Even a swing trade will be short term for me. I place a trade and I will expect to hold it for 2, 3, 4, 5, 6, 7, 8 months. So I'm waiting for things to really go into my favor. So I'll read the news, I'll read the macroeconomics, the fundamentals, and go, okay, why is this currency going to go against this currency? Why is this going to get stronger? Then I'll look at a lot of the seasonal data as well, and just like, all those sorts of things. And then I'd go, all right, well, in the next month or two, Australia should get stronger against, say New Zealand. Let's buy that. Let's buy the Australia, New Zealand. And then I'll sort of look at the chart and I'll go, cool, look, we're at a pretty good level. I can put my stops there. And I really don't set take profit levels much. I just sort of more ride it out and trail my stops as they go. And then I'll sort of, base it off that, really.
And so, I mean, just giving people an idea as to like how wide a stop would need to be for that kind of hold of a
I just took a trade. Hold. I just took a trade. I've got a 400 pip stops.
Okay, so it's pretty significant, but it's not ridiculous.
No. Like sometimes they can range between 200 to 500, 600 pips on average.
Okay, so thinking about this, like, and this kind of approach, which is bordering on, I suppose, investing to a certain degree, because it is, you're putting the money in there for a while. I mean, how do you deal with things like swap fees and all these additional things that come with holding something for an 2 to 8 month period?
If the trade's overtaken the swap fees, then that's really the main thing that matters. Yeah, swap fees can kill you a bit, but then you've also got positive swap fees, which can also counteract the negatives. So I might have, it's not like I just take one trade and wait for it. I'll take a trade and then, I'll build it up and, I might have 15, 16 trades running in my account. 7 of those might have negative swaps. The rest might have positive swaps. They kind of cancel each other out, if that makes sense.
Yeah.
And then the bigger profit outweighs everything as well as it goes on.
Okay, so that's the perfect way to get over the swap fee issue.
Yeah.
And so so thinking about the markets that you're trading. I mean, were you mainly focused on Forex markets, or you cover everything?
There's about 100 different markets I look at because I'm long term. I can sort of. It's not like I'm sitting there scanning markets every morning or every day. I just sort of go, I'm just keeping up to date of what's happening in Euro, what's happening in Australia, what's happening in New Zealand. And I can make a decision going, well, let's say the Norwegians having some problems, and then I could buy the Australian or something like that. You know what I mean? It's not like I have to scan markets for technical setups, look for these sorts of things. So I don't even look at my charts every day. Probably once a week or whenever I go to place a trade. If I had to put a whole total time on my chart time, about 15 minutes a day, a week.
A week? Wow.
Yeah, the rest is all just... And because in saying that, the lowest time frame I'm going to go is daily time frame. It's mostly weekly, monthly. So I'll definitely sort of, the rest of my day sort of keeping up to date with economics, macroeconomics, what's happening in the news, fundamentally based. Yeah.
And so when you started at Deutsch, you had this $5,000 account of your own, and the Deutsch stuff over there. Now, how did that sort of $5,000 start off for you? I mean, were you pretty confident that you were going to be able to grow that from word dot, or how did that look?
I took some big risks. I'm not going to lie, it wasn't like I was risking 1% the whole time, because 1% to grow it to what I got now, there's just, I would have done all right, but it's not going to be what it is now. So there was times where I'd be very confident. For instance, when Trump got elected, I bought so much US dollar, and it just went nuts. At first I was pretty bearish on the US, and before he got elected, that sort of stuff. But after he got elected, dollar yen just rallied for months, and I just built a huge position in that, and I was taking like 10% risk each trade. But in saying that, I was confident as well, and I don't suggest that to anyone, by the way. Just a disclaimer. I was happy to lose it because, yeah. So I was taking like a 10%. So all up, I had probably about 40% risk on that whole trade. 40% of my account at the time. That was what,
2016, was it?
16, something like that, yeah.
Maybe, yeah.
And there's been like during Brexit, I took massive shorts on pounds. And there was a few times where I was like, you know what, let's risk 20%. So I was short in the pounds during Brexit, 2000 back then as well. So those definitely did help.
And how do you get to the point where you are happy to risk 40% of your account on some positions? And I'm guessing some of those positions were already in profit, and
of course,
stops trailed and all that sort of stuff.
Scaled in, yeah, correct. It wasn't like I just took one big 40. It was like 10%, and then I'll be like, okay, cool, we're up a little bit more. Let's get 10%, until I've reached 40. And then I'll just start trailing the stop. So I'll take 10, and I'll cover that one, and I'll take another 10, and then I'll cover that one into profit. So I'm up 10% in profit locked in. Then I'll take that other risk. So it was kind of like that. So if it all came back on me, I was going to make it a little bit all break even, basically.
Right. Okay. Cool. That makes sense.
So I did cover my risk pretty well. In saying that, I did the same thing on the pounds when Brexit happened. So that's really how I sort of took some big positions. But the day-to-day stuff, like I'm not doing that every day. Like the day-to-day stuff, I'll risk, maybe 5%, 1%, sort of between those ranges.
Okay. And so what do you consider like a sort of day-to-day kind of trade?
In terms of risk?
Well, no, just in terms of the kind of trade versus, I suppose, the Brexit or Trump being elected kind of thing.
Yeah, so those events happen. So in Australia, I think on the 21st of this month, we have the Australian elections. So I'm kind of deciding what to do around that. But the day-to-day stuff will be more so just reading, okay, cool. Like, for instance, more recently, the euro dollar has been smashed because dollar's been getting strong and the euro's been getting weak. And I sort of, with day-to-day trading, will be like, okay, let's just take like a 1% risk on this and just let it ride out. That trades, I did have it right now, and I think I've closed it now though. I think I was going for about a month, so it was pretty short trade.
Okay, cool. And so thinking about like the, I suppose way back when you were first starting out and you were growing this $5,000 account. I mean, do you remember like a time when you were like, hang on a sec, this thing's getting serious, in terms of how much you were making on the account?
Yeah, that was during the Trump election.
Oh, right.
Yeah. Oh, no, sorry, the Brexit. Because that was before the Trump election.
And can you explain sort of like what were the sort of key moments then?
When I sort of took some trades, and because like during the Brexit, I don't know if you're looking at charts back then, but if you go back and look at the chart, you could just sell anywhere and you're not going to get stopped out. Like it was just drop. And I just kept adding. And I'm like, wow, I've just made a lot of money here. And I'm like, let's do that again. So, but I knew I had to wait for very, very, very certain key events. I couldn't do that every time. But that's when I sort of started making real big bulk money. And then I was like, okay, cool, this felt great. And I was still working at the time, still working at Deutsche Wonder. And I was just, talking to my team and stuff. I'm like, what I do on my, breaks and stuff. And they're like, you could have done that for us. I'm like, you won't let me take that much risk. Which, yeah, obviously. But, we still performed good back then. But yeah, and that's when it got to the point, I think after Trump, I was like, you know what, like I've just done another big one. I'm like, I've got enough capital now where I could just go full time myself and handed in my resignation. And I was like, hey guys, like, love you, but, I'm alone now.
And so 15 minutes, so it's quite a very unique kind of style compared to almost every single guest that I've had on the show. And I mean, the fact that you're able to sort of show, okay, albeit with a, risking 10, sometimes 20% on the account on these big fundamental moves. I mean, how did you even get to that point where you were comfortable? Because it is a mentality thing from my point of view, where you're comfortable like with these longer holds and only doing 15 minutes on the chart and sort of, reading a lot of news.
So I don't believe markets move based on charts. Like, yeah, there's going to be short-term little moves based on what do they call, like head and shoulders and that sort of stuff.
Yeah.
I don't know the names of all of them. There's going to be short-term moves based on that sort of stuff. But I think the big, massive moves, people need to pay attention to the big macroeconomics. Like it's, I'm not big in the retail trading space in terms of like social media and, all that sort of stuff. So I kind of keep away from it. But from what I see every now and then pops across my sort of Instagram or on YouTube, is just, I made, 200% on a little secret pattern. And I'm just like, really? Like, come on. We would have been doing that at Deutsche if that was possible. And look, short-term stuff, you can do that sort of stuff. But I think if you want to make a real good career out of it for the next 15, 20, 30, 40 years, you've got to start paying attention to the big stuff, the big moves in the market, why things actually move. So, yeah, look, although you can trade quite successfully based on technicals and charts and that sort of stuff, I think if you want to do really, really well, you got to at least mix both of them together.
Mm. So from a technical point of view, I mean, what exactly are you doing to help you get possibly a better entry than just...
Yeah, so I'll just basically look at the chart and go, okay, cool. We have a support level here. My stops could go under this sort of price range here where, basically support and resistance is really all I use in a technical level. I don't use trend lines either. I don't use any patterns. It's just basically support. If price is at a big support, we've got good economic data to buy this. I'm like, oh, cool, we're at a good support level. I know that there's going to be sort of, people buying around here, then I'll look at taking a trade from this level here. Whereas if kind of, for instance, hanging around sort of in no man's land, there's no big support, no big resistance, I'll be like, let's wait for something to happen. Let's maybe wait for the market to pull back a little bit and create like a new higher low or new lower low or something like that, a new lower high, something like that. But in terms of anything else, that's really the extent it goes to.
And in terms of like looking at your win percentage and stuff like that, I mean, how does that look?
I think I've got about a 40% win rate.
40% win rate and a risk to reward?
My risk to rewards are probably around 1 or 2, 1 or 3, 1 or 5s.
Okay, so not hugely dramatic risk to rewards or win rates at all. Okay, so it's pretty steady from what I'm hearing.
Yeah, and that's like, and that's really like the basis of how I know most professional traders. Like most professional traders, I know for sure at Deutsche, a lot of our trades are like 1 or 2s, 1 or 2.5s, and we'd have huge stops, huge profit levels. So it's the big thing I see as well is like if you're going to have a large stop loss like I do, it's going to be hard to capture like a 1 to 10 reward. Like it's going to be very hard.
Yeah.
During like big times like Brexit and Trump election, that sort of stuff. Yeah, I did a few big ones like that, but every day to day, weekly basis, it's like 1 or 2, 1 or 3s, 1 or 4s. I try go bare minimum 1 to 3.5 or something like that if I can.
And sorry, jumping back into the Deutsche. I mean, what did you sort of learn there from a trader education? Because this seems to be your education to a certain degree. Did you learn anything specifically there that you sort of apply to your own trading now?
Yeah, all of it really.
All of it, okay.
A lot of it was the fundamentals. Why is market moving against others? Others is there's other stuff like seasonal data, like what's happens to the dollar in May, for instance, on average over the last 10, 20 years. That sort of stuff can have a big effect on the market as well. I look at sort of market sentiment, so retail versus institutional. Like if retail's going long, probably want to go short myself, that sort of stuff. So, there's a few things that go into there. Just big, it's mostly based, all the macro fundamentals, economics and that sort of stuff. So that's really the way, in a nutshell, what we looked at back then. Then there's a few other things which I can't get access to just because it was sort of their programs now. But from the main thing was just basically keeping up to date with the economics. And
did you have like a mentor there that helped you get to a level of and how did that help? Was that mentor, if you had to compare the mentor versus you now, Would you say you've outshone the mentor, or are you still?
Oh yeah, I am the mentor now.
Oh, you're the mentor now. Okay,
no,
right.
I'm joking. No, we still talk. I still talk to everyone. I still talk to all my friends from there. And they're doing great. Some of them are still working there, and they're doing fantastic. So I'll always see him as my mentor, my superior, I guess you could say, my leader. No, but I'm probably you learn the same stuff as him, so we're probably just as great as each other. Like we've got a lot of the same ideas, but it wasn't like it was one-on-one mentoring. It was like it was a group of us, a team of 5. And I was like the newest guy there. Some of them have been there for 3 years, some have been there for 5 years, but you're always going to have this head trader, this head guy, who's going to take care of everyone, oversees us all. So, yeah.
And what do you think, I suppose, if a retail trader listening to this was going, like, can you give me something to take away that you learned from the working at Deutsche that the retail traders just aren't seeing or aren't sort of getting their head around? What would be that thing?
I think a lot of retail traders think that we've got some secret magic. Like we don't. We're looking at a lot of the same stuff that you can get access to. Like a lot of the same stuff that I have now. Another thing is we don't hunt stop losses. We never did. So, that's a big one out there. People always always see like my stop loss hunted. I'm like, I've never even heard about that until I heard retail traders talking about it. Like we don't look for those sort of big liquidity pools, I guess people call it. We never did anyway. I've never heard about it until sort of, I saw people talking about it on social media and whatnot. But like that sort of stuff, like try and get that out of your head because we're not doing that. The most people get stopped down and call it a stop hunters because, they might have a very small stop loss. What moves the market on a short-term basis, people don't understand this. Actually, this is probably a good point. People don't understand what moves markets on a short-term basis, not just us trade, not just big institutions, but a lot of it goes into big mergers from companies. So if you got like Coca-Cola that wants to buy, I don't know, sugar in New Zealand to make all this Coca-Cola, and they're going to buy, $100 million worth of sugar, they're going to make a transaction through the currency, and that's going to affect currencies. A lot of the times, if you see short-term fluctuations, that could be just big companies transferring money from another thing to another. You know what I mean? And if you transfer over 20 million in one go, that's going to make a big drop or rise or whatever it is in a currency. So people don't understand, like on a 1 minute, 5 minute chart, that's what you're seeing a lot of the time. And, millions and millions of companies across the world doing that on a day-to-day basis.
Yeah. Yeah. And it does make sense. Complete sense.
Yeah.
And I suppose from a retail point of view, maybe it makes people feel a bit better if they know that their stop was hunted as opposed to it was just hit.
Exactly. Yeah.
It's like I've been hunted down.
We can't see your stop losses. Like we don't get that information from brokers. Brokers don't sell us your, like, hey, we got like $100,000 worth of stop losses here. Because you got to understand what takes to move a market, even just like 10 points, it takes up a lot of money. So it's not worth us going, we might have some stops here to get some liquidity. And you've got other things like end-of-day transactions and whatnot, where basically you might have a client, a big wholesale client, who wants to transfer I don't know, let's say 50 million from euro to Australia, and he'll call up and look, I want a better price. So that's where we'll go, okay, cool. We can do that for you, but we're going to take X amount of commission. So we might take, I don't know, let's say 5 million commission. We'll spend 1.5 million pushing the market down so he can get a better price to buy. And then he will push it up. He'll take a transaction from that and take a cut from that.
Okay. So there is that sort of manipulation in terms of like, but not to try and manipulate people in the market, just to get a better price.
Stuff.
Yeah.
Yeah. It's legit stuff.
Okay. And so to push the market down, because this was another question I was going to ask, because I've seen it before where I was on a call with somebody who, whether or not it was true or not, I don't know, but they picked up the phone and they're like, right, sell whatever it was of, 500 lots of this, and they're trying to get the market to go in some one direction, right? And to then get a better price or get out of the trade. I can't remember what it was, but so that does happen.
Yeah.
Yeah.
And he's saying he did that on the live call with you.
Yeah, on a call.
Okay.
On a call.
I can tell you right now, it's probably bullcrap because that's not going to happen like that. It takes a lot of work to do that.
Yeah.
There's a lot of paperwork involved.
Right. Okay. Right.
Because you got to understand it's large transactions. You got to, it's not like you just call the broker and be like, hey, sell this. Like, yeah, you can do that, like to trade and stuff. But if you're going to make something like that, you want something to move the market, you got to go, okay, cool, let's finalize all this sort of stuff with paperwork and then let's get it through. So yeah, that's
okay. So it's not, and is it? Do you think would you say it's a daily occurrence where this is happening? Where
oh yeah.
Okay, and in terms of like bringing the market down,
it might only be like 5 or 6 pips, but if you're going to transfer 50 million, that could be the matter of $10 million or $5 million, whatever.
Right. Okay. Sure. So you are sort of chucking money in to try and bring it down to that level, gets there, and then you do your transaction
only
and off it goes.
Pips. Not like 30, 40, 50 pips.
Okay, cool. All right, that's interesting. It's interesting. Well, hopefully you guys are out there listening are getting some good insight into what really goes on behind the scenes. By the sounds of it, nobody's out to get you. No. Now, what about, like, how did you deal with Corona and so when the pandemic hit, and then also when the Russia-Ukraine conflict started?
Yeah, so I had a lot of the bulk of my money's in stocks now, shares, long-term shares, and pay me dividends and whatnot. I only keep a little bit in my trading account now. So during the Corona, it was scary because we had that big initial drop. And I only buy Australian shares. I don't really buy American shares. And that sort of made me go, oh, do I need to go back to work? But then we sort of had that massive rally, and I was like, okay, cool. Like, this is doing great right now. So last year, actually did really well. Last year or year before, whatever it was. First bit was scary, but then it just went really well. And I started buying more shares. So that I dealt with my portfolio. So that was shares. That wasn't currency trading. Currency trading is a different story. So I'll talk about the shares first. That where I just basically held onto my portfolio, and I just let it go because I knew they were good companies. They weren't going to go bust during COVID. So yeah, I just basically held onto those, and they've done well now. You know, they've outperformed what they were. And with my currencies, I kind of stayed out. I didn't really trade at all. I just sort of took a break, and it was too uncertain. I was just like, I tried a couple here and there, but I was just like, too uncertain. I'm just going to take I took 5-6 months off from trading. Then the Russia-Ukraine, I just started shorting the euro dollar, and that went really well.
Cool.
Yeah.
Okay, and so you talked about like having, basically spending 15 minutes a week analyzing the charts. I mean, so that's analyzing the charts.
That's just technical analysis,
right? But then the actual analysis of everything else is
that's an everyday. That's an every minute of the day thing. Like, because I don't sit here at my desk doing it, but I might be sort of. I'll probably spend. So actually, I have my own office, like to get away from the house to trade. I'll come to my office at like 8 a.m. each day, drop the kids off at school, come to the office, and I'll probably leave by around 12 noon. That's basically me just keeping up to date with, all the latest news. If there's any new positions, I'll do it. And to manage any positions, that's it. But from 12 until the next day, I kind of, there's not much else to do. I just sort of go home. But I'm still I can't help myself, still reading like news and Bloomberg and Zero Hedge, that sort of stuff.
Okay, so those are your two go-to sources. Are there any other sources if somebody wants to get into this that they should go and check out?
Look, there's a lot of great ones out there, but I mostly use Bloomberg and Zero Hedge. And then you got investing.com as well. They're great. Daily FX, that sort of stuff.
And what sort of things are you looking for in all this reading that you're doing?
Never anything specific. It's more just what pops out to me. So I might go, I might have an idea where I'm like, okay, cool. Just due to things like happen in Australia. Actually, for instance, great opportunity to talk about it right now is Australia. The Australian currency, I'm pretty bearish on it. We may have an interest rate hike of 2.5%, which generally it's good for the currency. But when you look at the long-term view of it, how's it going to affect people? How's it going to affect households? It's basically going, interest. So I don't know what's like in New Zealand, but here on the Gold Coast, if you had a house for $600,000 pre-COVID, people are buying them for like $1 million now just because they want them.
Yeah.
And there's so much, demand out there and not enough supply where people just paying over for the houses. People are getting loans that they can't afford it, right? they're just handing out loans that just can't afford. When interest rates go up 2.5%, which they're about to do, people home loans repayments are going to go up, around $1,200 a month. A lot of people won't be able to afford that. Rent's already up, fuel's up, everyday household living's up. People are going to struggle. So instead of just going looking at the interest rate hike, going, yeah, cool, positive, short term, yeah, long term, how's that going to affect the household income? And that's what I look at. And then I go, you know what, I want to be, rallies in the Aussie dollar, probably want to start shorting them because it may take a few months, it may take a year to play out, but I definitely think, that's how I think. So, and I'll sort of go, then I'll start reading about the Aussie on Zero Hedge or Bloomberg and that sort of stuff, what's keeping up to date. So it's not really, I don't really just look at that and go, where's a trade? I just sort of more scroll, something might pop out and go, interest rate hike in Australia. And then I go, okay, cool. How is this going to affect us?
And do you sort of have to note all this stuff down in a logical way that, or you put in a spreadsheet or something so that you go, this is happening, this is happening, this is happening, this equals that, and therefore I'm going to buy. And
no, I just do it all in my head.
You just do it in your head, okay.
Yeah. Look, I suggest everyone to write it down, especially if you're new to it. Write it down and keep it there so you can remember, so you don't forget. And I used to do that, but now it's to the point where it's like a car mechanic. He doesn't need a manual anymore to pull out an engine. He just does it by head, memory.
Yeah, and so if somebody was going to write it down, I mean, what did you do, and how did you sort of start out writing this stuff down so that you had a logical way of doing it?
So I'd write down, I'd basically put my own sort of little headline now. I go, cool, Australian dollar. Let's just use Australian for current instance. Why is Australia going to get weaker? And then I'd go review different websites. Okay, cool. This is, and I'd sort of have a pinpoint of I'll give them numbers there's let's say there's 10 points of why the Australian dollar should get negative, and then I'll go, there's only 3 points why it should be positive. So I'll try and find negative news, and I'll try and find positive news and outweigh them. So things like that, you know what I mean? I'd go, okay, cool. So let's say, for instance, this interest rate hike, positive, but how's that going to be the long-term effect for household income? Then you list down all the negatives, fuel's higher, groceries are higher, living days, electricity's higher. I think we've had almost since COVID, 149% raise in all household incomes. So how's that going to affect when interest rates go up? People just simply not going to be able to afford everything they've gotten. And also not to mention car loans. People have gotten car loans because everything's low interest. So people don't think it. And then I'll write that down as a negative and go, okay, so that outweighs just one interest rate hike.
Okay. And so when you get it wrong, what are you sort of can you attribute it to something if you get it wrong?
So let's say I took a trade and I got stopped out, you mean?
Well, you got stopped out, or you just, maybe you got it right and it just stopped you out. Maybe it's not, maybe it's more that you got the fundamentals wrong somehow.
I just move on. I don't really sort of dwell on it. I just move on and forget about it.
And is there sort of I suppose a way that you go, well, I got it wrong because of this, or is it more just, it didn't work?
It just didn't work.
Okay.
Look, you can do all the fundamentals, and so for some reason you go, okay, this is going to be negative. For some reason it rallies, and I'm going to move on. I don't really dwell on it. I don't really sort of look for why. I don't really journal, if that makes sense. I don't journal all my trades. I don't journal why the things are going to go up and down, that sort of stuff. And I know that's a very important part, especially if you're new to trade. Definitely journal. But I sort of more to just keep up, sort of, okay, it didn't work out, and I just know that's the way the market works, and I'm just going to move on.
And I suppose talking about journaling and I suppose understanding what you're actually doing. I mean, if somebody was going to try and get into this themselves, what stuff would you say? Hey, look, go off and do these 4 things to get into this.
Great question. I've actually can I talk about what I asked you before?
Yeah.
What I just bought.
Yeah.
So I just bought into a trading company. So pre this, I was never part of any trading company. I just could not be bothered. I couldn't be bothered teaching, couldn't be bothered doing anything like that. But I just bought 20% of a company. Can I say the company name?
Yeah, go for it, mate.
They're called Elite Traders, and they basically provide signals. But they're legit. I looked at the last 5 years of how they've been running. I looked at their performance before I bought it, and I go, okay, cool. These guys are actually got a good performance. And I'm like, look, I don't want to be anything but background work. I just want to help out and that sort of stuff. So they've actually asked me to sort of do a few things here and there, more background work. And whatnot. And a lot of what they emphasize on is for traders to journal their trades. One, have reasons why you're going to enter and exit. They don't just do signals, but they do education as well. And why is sort of they do emphasize on why did I get stopped out? Have a reason why this trade simply didn't work out, and that's great. You should probably do that, especially if you're new to it, so you can build your confidence into understanding. Okay, cool, this trade didn't work out. It wasn't my fault. It's just my analysis was correct, but it just didn't work out because something else may have happened. So they focus on a lot of journal your trades, keep up to date with sort of definitely the economics and fundamentals, that sort of stuff, and which is perfect. Write it all down, so it's always on a notepad. I just can't be bothered. I'm lazy, so that's really why I don't do it. I'm just very lazy, and like sitting here at a desk with ADHD trying to write stuff down is very impossible. So I'm just like, my head's everywhere.
Okay. All right. Well, I'll tell you what we'll do. We'll hook up a link to their Elite Traders in the show notes so you guys can find out more about them. And just sort of on this, like a couple of things have sprung to mind. One is, have you ever like thought, wow, man, these guys are doing way better than me in terms of like, I prefer that the way that they trade, like maybe they're in and out with a 5-hour trade in a day. And you're thinking, well, I've got to wait like 3 months for my 5-hour trade. Have you ever sort of got to that point where you're like going, oh, maybe I should change what I'm doing? Or maybe back in the day you thought that? And how did you obviously didn't switch. So I'm just sort of wondering how you didn't suffer the strategy hopping syndrome that affects so many.
I think a lot of that came from my professional background. I was taught how to do it back then. I think if I was taught now, if I started learning now, it'd probably be a lot different story. But I've never thought about changing my system just because I know it's worked. It's why would I change something? You don't fix something that's broken. Sure, like I don't understand all the little technical analysis stuff. That would be brand new to me. I would have to learn all that, all the patterns and that sort of stuff. I'm trying to think of the names, but I'm going to be here for
patterns, candlestick patterns, and
I would have to learn all that. I can't sit there and go, okay, we're going to put my stop here, and I have this 5 reward trade here, and I'm going to enter because this head and shoulders or this, what do they call like bat patterns? I've seen those, like the ABC stuff. I forgot.
Oh yeah, the harmonic patterns sort of thing.
Harmonics, that's it.
Yeah,
I can't look at that. That's confusing as hell to me. And so I don't look at all that and go, I'm going to do that. So I basically go, what works for me is very simple right now. I know how to do it. Like it's like the back of my hand. It's there. Like it's indented in me over all these years, and I can sort of just trade based off that. So I don't mind getting a 1 to 3 risk reward because it's not like I'm risking $1,000. My trades, I'm risking like 15, 20 grand. So, when you make a 3R on a 20 grand risk, it works out a bit better. So it's not like I have to risk $1,000 and wait like 4 or 5 months for 3 or 4 grand profit. It's like I'm risking 20 grand and make 60 or something like that.
Yeah. So it's worth your while, and therefore it's like, well,
yes.
The fact they've got to wait 3 months to make 60 grand is
doesn't sound too bad.
Yeah.
Even if you had to wait for a year for it,
exactly.
It doesn't sound too bad.
It's a salary for some people. So
yeah. And in saying that, it's not like it's still low, relatively low percentage risk. So I'm risking, like I said, I'm risking anywhere between 1 to 5% on how confident I am for the trade. So it might be like a 10 grand, 30 grand, 50 grand, 60 grand risk. And sometimes I'll even risk lower than 1%, like 0.5%, if I'm just sort of just testing the waters a bit.
And the big, I suppose that one question I got, you might have a simple answer to this, is how do you know when to get out of these fundamental moves?
A lot of it comes, I trail my stops a lot. I can either trail, there's 2 ways I'll do it. I'll either trail my stops or I'll sort of go, for instance, today I had a trade on Aussie CAD. Not today, sorry, but I've been holding a trade on Aussie CAD. And I basically got out of it because I didn't enter too long ago. It's kind of hanging around break even, but I'm expecting an interest rate hike, which could, like I talked about earlier, short-term bursts to the upside, but long-term to the downside. And I sort of just protected myself. I got out for that reason to basically break even. And I was like, okay, cool, let's possibly get another entry. Worst case scenario, like that's it. But I'll keep up to date. So I closed my euro dollar short because that was basically based on a big support level. So that will be based on sort of a bit of technicals, but also trailing stops as well. The two biggest things I'd say.
And in getting into the trades, are you putting limit orders or are you getting market?
Yeah, there's times where I'll use limit orders. If I'm expecting something like a push down before a push up or vice versa. Otherwise, I'll sort of just market executions because I'm not looking for perfect entries. I'm not waiting for candlesticks to appear. I'm not waiting for like a pin bar or some of that. I'll sort of go, oh, we're at a cool level. Let's just enter here. Even if there's a big bearish engulfer on the daily chart and I want to buy it, I'll still buy it. Even if it's a big bearish engulfer, it's not like I'm waiting for that. So I'm not looking for perfect entries. I'm just looking for a good entry.
Yeah. Okay, cool. And like, what about from a mindset point of view, if somebody was going to get into this, what kind of person would be ideal for this, first of all? And then secondly, if you didn't have the right mindset, what would be some sort of identifiers that, hey, you don't really want to get into this?
Okay, so my brother can't do it.
Right.
He's very, very, very impatient. I've tried showing him everything I can, and he's just like, I can't hold that long. Like he wants to be in and out in microseconds, like very scalping, and I'm just like, well, good luck. So he's a very impatient person. If you're very impatient, you're not going to be able to do it. You need to be able to build your patience up. If you're like me, so I'm a dad. I have my own life outside of trading. Got kids at home. I've got kids. I don't even think about anything. I live like just a normal person. Like that's another thing as well. Is like I'm not a glamorous person. Like if you look at me on the street, you'd think I'm just like a bum or something. Like, I drive a Mazda. I dress normal. I don't own any luxury items. So it's, to me, like trading's more so it's a job where I get paid based on my performance. And if I look at my past history and go, well, I paid on, let's say like some people get paid on a monthly basis, I don't need to make that income every week. So if you're someone who's like me, where you've got a lot of patience, discipline, but also a very busy lifestyle outside of trading, longer term is going to be good for you. But if you're single, 20 years old, you sit at home playing video games all day, you're in front of the charts all day, you might be a shorter term trader. And there's nothing wrong with that. It's just basically on your personalities. What they always say is it's how you are as a person. So yeah,
that's interesting about your brother.
Yeah, he goes.
But I can sort of I see that the struggle you'd have with like holding something for that long is, it can be not for everyone. Now we're going to just wrap up here with a few quickfire questions, and then we'll close up the show. So, how long did it take you to go from newbie to consistently profitable?
About a year, but that's because I had the professional help.
Actually, just on that, what was the sort of best thing you got from the professional help that you did get?
Slap on the wrist if there's something wrong.
Right, and how bad was that slap? Was that someone yelling at you, or?
No, it was basically so back then we didn't trade live for a good year. It was all just like sitting with our traders, why we're buying, why we're selling, what we're going through, helping them with transactions, helping them with everything like that. Then they would start us with something small, like a small, like 100,000 account. And then, small to Deutsch. And then they'll see how we perform, and then they'll sort of let's increase as you go.
And do you think, like, from this isn't the quickfire round, do you think that anyone that went into Deutsch would be able to come out with as a profitable trader, or were they just churning through people like, nah?
Not so much churning, but would sort of like, would have like, maybe after you, like, maybe you're better suited in another role.
Right.
So it wasn't like they get fired. We'd always like sort of try and go, maybe something else you could do. But so you might not be a good trader, but you might be a great researcher. Might not be a great researcher, but you might be good at executing trades and not give a crap if you lose or win. You know what I mean? Or you just might be great at getting coffee.
Yeah. So what would be the sort of identifier of like somebody who's just not cut out for it? Is it purely done on the P&L and the results?
No confidence. No confidence to sort of be able to sit at their desk and just do their work. It would always be like, even after like 2 years, they'd be like, oh, is this okay? Or they'd be like, oh, I want to get out of this, but you couldn't just close the trades. It was more so, let's close this trade, but why are we going to close it now? And it'd be like, should I? So very sort of, just not confident enough.
Yeah, indecisive. Right.
Yeah.
What's your favorite entry setup?
I don't really have favorite entries. It's kind of hard to determine that one because it's not really a technical question.
Okay.
It's more.
If you haven't got one, you haven't got one. It's
great fundamentals, I guess.
Yeah. Okay. Right. So, yeah. Okay. Cool.
I could say that it's actually very bad. I'm not going to say it. I'm not going to say it. I'll message you later.
Okay. What about if you had to send somebody to a recommended book or a resource? Where would that be?
Well, I should say Elite Traders now. A book? I don't really know. I've never really read many trading books at all. I don't know. I don't know any good trading books. So.
Okay, cool. So there's so what about
I'm
a
very
resource?
into the retail stuff.
Okay,
not the retail, like the social media stuff.
So, okay, cool. All right, let's move on to the next one. Preferred broker and trading platform.
Look, there's a lot of great brokers out there. I use MetaTrader 4, always have. It's just used to me. I'm just used to it. Great broker. You got Fusion Markets. You got 8cap. You got Global Prime's great as well. Pepperstone, they're good.
Cool.
So they're probably cool.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. And do you want to walk us through your worst ever trade?
My son. So I had my desk open. This is when I was working from home. He hit my mouse and I had the little buy sell thing up. He clicked it. He's like, "Oh, it's so bright, it's flashing, it's clicking." I didn't even know until like 2-3 days later. I lost something like 4%.
You're kidding me.
He didn't have a birthday that year.
Oh dear, you're kidding.
He saw bright flashing lights.
Oh, that's just classic.
My own personal trade, I probably got overconfident on gold at one point, and I think this was probably back in 2012, and I probably risked a little bit more than I should have.
Cool. Awesome. Okay, we won't let you relive that. Now, if you could leave our listeners with one piece of advice, what would it be?
I just noticed I was moving back in my chair, like I was moving back and back as we were talking. Like, hopefully the quality isn't gone. Advice? I think my best advice would be basically keep up to date. Like, understand why markets move fundamentally. Forget the fact that you think that you're getting stopped out by stop hunts, because it's not true. The broker's not against you. A decent broker anyway. There are some dodgy ones out there. But I think just more so, just really fact check where your information comes from. Keep up to date with fundamentals, because that's very important in trading, especially long term.
Cool. Well, look, TraderX hasn't got anywhere for you to head. Well, actually, you do have somewhere for people to head, not to find out more about you, but just to.
No, they won't even find me on there. Like, I'm anonymous, and that's just because I don't want to be caught up with that stigma of treat. I don't like the Instagram stuff. So, Elite Traders. I will. You won't be able to contact me there. There'll be no information about me there because I want to keep it that way. But that is who I'm going to be working with.
Cool. Look, guys, a big thank you to TraderX for sharing with us today. Everything we discussed here, along with that link, are in the show notes. To find them, simply search for TraderX, or just X, maybe, in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, there you have it. Interview done and dusted with TraderX. I told you it was a bit strange in terms of his approach. No technicals, just the fundamentals. Really, really interesting. So, guys, do remember we've got the Trading Nut Funded Cup. Go and check that out. If you want to register for the June one to win prizes, to show your trading ability, then go and check that out over there on tradingnut.com or City Traders Imperium. We've got live streams galore this week. I've just counted them up. We're possibly going to have 6 live trading live streams covering a variety of sessions, so Asia through to New York. We've also got another video dropping, which is a bit different from normal. We're going to talk about journaling with the guys who created some awesome journaling trading software. Do remember, Genius Traders Club, doors still open, but the price is going to jump soon, and same with Robot Builders Club. You can come on board. I can help teach you how to automate some or all of what you do. Thanks for watching, thanks for listening, and we'll see you in the next one.